right? In budget, government have made certain proposals. Government have made certain proposals with respect to tax reforms. With respect to tax reforms. New income tax rule, new income tax rule shall be implemented. New tax rule shall be implemented from 1st April 2026. 1st April 2026. Apart from that, there is a proposal in a budget for MAT, M-A-T, MAT, minimum alternate tax. Minimum alternate tax. According to new rule in MAT, there will be 14%. In brackets, earlier it was 15%. There will be 14% MAT will be applicable. MAT will be applicable on companies for the purpose of their tax liabilities. For the purpose of their tax liabilities. However, this 14% tax shall be considered as a final tax. Shall be considered as a final tax. And MAT credit will not be available. And MAT credit will not be available. MAT credit will not be available. So see, the case is when we talk about MAT, minimum alternate tax, you can write it side by side. It was introduced in 1987. Fine. It was introduced in 1987 and it is implemented on book profit. Book profit. So whatever you are going to show as a profit, fine, that profit shall be liable for the tax directly. For example, if a company's revenue, fine, revenue is 100 crore, fine, 100 crore, and expenditure is suppose that 80 crores. How much profit they have made? 20 crores profit they have made. Fine, 20 crores profit they have made. Now suppose on this 20 crore profit, income tax, fine, the corporate tax. So the corporate tax is at the level of suppose 20%. Fine, 20%. So what companies was doing earlier before the MAT system? Before the MAT system, what they are doing? They are inflating their expenditure by using deduction, exemption, and rebates. So while doing a production activity, government provides certain incentives, and these incentives for companies can be divided into deduction, exemption, and rebates. So by using all these things, what companies are usually doing? Companies are going to show their book profit. Fine. They will inflate the expenditure, plus expenditure they will show, and after the expenditure, what they will do, apart from the expenditure, they are going to use exemption, rebate, and deductions, and they will increase it to exactly 100 crores. Fine, exactly 100 crore. So your expenditure is 100 crore, your revenue is 100 crore, then ultimately tax will be 0. Fine. So in order to solve this problem, government have introduced the minimum alternate tax. So write it there. Every company in India must calculate their taxes into two ways. Normal tax calculation in two ways. One is normal tax calculations and MAT calculations. Normal tax is calculated on net profit. Normal tax is calculated on net profit. Fine. Now, in order to understand this, suppose it will be better understand in this way. Suppose they have shown the profit. Fine. Profit as 100 crore. Fine. They have shown the profit as 100 crore and they have shown these deductions of 80 crores. Fine. So the deductions, profit is how much? 100 crore, but they also have utilized deduction, exemption and rebate of how much? 80 crores. Now how much is left? 20 crores. So 20 crore is left. Now the two type of tax will be calculated. One is corporate tax and other is MAT, minimum alternate tax. Now, as of right now, MAT is applicable in India at what rate? 15% rate. Fine. MAT is applicable at 15% rate. Now, suppose corporate tax is applicable at 20% rate. Fine. So corporate tax is applicable at 20% rate. So when the corporate tax will be calculated, it will be calculated on net profit. Fine. Net profit here, the profit minus standard deductions like exemption, rebate and exclusions, all these things will be excluded and then it will be how much? 20 crores. So what will be the tax value? 20 crore, 20%, how much? 40 कहां से आ जाएगा भाई? 4 crore. Net profit पे calculate करना है. You have to calculate on how much? You have to calculate on net profit. How much it will be? 4 crores. What is a net profit? Net profit is the profit in the book minus standard deduction. You can write it there. What is net profit? Net profit here is book profit minus standard deduction. Book profit minus standard deduction. In this case, how much it will be? 4 crores. So you have to pay the tax of how much? 4 crores. Apart from this, MAT will be also calculated. Apart from this, MAT will be also calculated. MAT will be also calculated with tax rate of 15%. Tax rate of 15% on book profit. Tax rate of 15% on book profit. What is book profit here? 100 crores. Fine. So book profit is how much? 100 crores. So if book profit is 100 crore, what will be the value of MAT? What will be the value of MAT? 15 crores. And you have to pay whichever is higher. You have to pay, you have to calculate both. Which one? Corporate tax and MAT. And whichever is higher, you have to pay. Fine. So how much company have to pay? 15 crores. But company said that we have paid as a MAT 15 crore, but our tax liabilities are less. Now here there is a catch. Fine. When company is going to calculate its profit, fine, company is going to calculate the profit. So profit is going to be revenue minus expenditure. Fine. So what company usually do while calculating the expenditure, they use deductions, rebate and exemptions. They add this one. Fine. They add this one. So their expenditure got inflated. And because the expenditure is got inflated, then the profit is going to be less. So this is why government said that whatever is your revenue, whatever is your profit. Fine. Whatever is your revenue, whatever is your expenditure, and whatever is your profit, now calculate in this way. One is going to be book profit. Fine. The book profit. So what you will do in the case of book profit? In the case of book profit, whatever is your total revenue and minus expenditure, what is not applied? What is not applied here? That is standard deductions, rebate and exemptions are not applied. Fine. That is not applied. So when company have calculated the example which we have written, that came how much? 100 crores. Fine. Then on the book profit, company is going to claim standard deductions, rebate and exemption, and company have showed how much? 80 crores. So now 80 crores. Now it is how much? 20 crores. It will be caused as net profit for the calculation of corporate tax. Corporate tax. So corporate tax is going for net profit. Fine. Whereas MAT is going for book profit. Fine. So now book profit, under the book profit you have to pay how much? 15 crores. And under the corporate tax you have to pay how much? 4 crores. Fine. 4 crores. So company will be asked to pay how much? Companies will be asked to pay 19 crore. Kahan se bhai? Whichever is higher. What do you want? All the companies should run away from the India. Whichever is higher, that need to be paid. Fine. So you have paid. What you have paid? 15 crores. But after paying 15 crores, you have sent all the details. What you have did? You have refined your deductions, exemptions and rebate. You have redrawn it. You have redrawn it and you said that no. Our actually exemptions, rebate and deductions, they are not 80 crores. भारी mistake हो गया. ठीक है? गलती से mistake हो गया. We have made a wrong calculations or we are revising our claim of exemption, rebate and deduction. So we are revising our claim of rebate, deduction and exemptions, and we are going to revise it only to 50 crores. Fine. So abhi 50 crore revise ho gaya. Fine. So abhi 50 crore aapne revise kiya. So if you have revised it to 50 crore, so if they will revise it to 50 crore, what will be the net profit? 50 crores. And on 50 crores, if the tax will be applicable with the 20% rate, what will be the tax? 10 crores. Fine. तो अभी आपने 10 crore का proposal government को भेजा. Government have accepted that proposal. Government said that okay, fine. Fine. Government said that okay, fine. And this system is called safe harboring. The system is called as safe harboring, which I'll explain you. But just for the clarity, understand this safe harboring. So safe harboring means, for example, safe harboring usually means if I'm saying that my company is going to grow by 100% in next 5 years. So I have organized, all of you are the investor in my company, and I have told you, ki see, my company is going to grow by 100% and you have to invest. Fine. So after 5 years, company have grown only 40%. And you recorded that speech and you went to the court and you said that ki this person have said that ki company will be grow by 100%, but company have grown by only 40%. He have cheated us, and that is why we want a imprisonment for that person. So company will grow 100%. That is my assumption. That is my assumption. So on the assumption basis, I told to the Securities and Exchange Board of India, ki see, this is what I have made an assumption. And the same will be communicated to all the investors in the proper communication while issuing the shares. Ki it is a company's assumption ki company is going to grow by 100%, and you agree on this assumption. That is why you are investing. So I have put a safe side for me. So whenever you are going to say something, fine, but at the same time you know that if you say something you might be under a kind of problem, then you have a escape route for your words. Fine. So you said that I love you, but as a friend. So you have put a safe side. Fine, आपने safe side रख दिया. If things are going to be act accordingly, then this clause will be removed, and I love you will be remain there. But if things are not going to happen, then this love will be removed. What will be remain? Safe harboring. Okay? So this is called safe harboring. And see, because in the finances things are not sure, so safe harboring is required. Now here in this case, fine, here in this case of tax liability, 4 crore versus 15 crores. So this is not just a 2-5 rupees amount. Here the difference is of 11 crores. So in this case of 11 crores, suppose company is adamant, you know our tax liability is how much? 4 crores. Taxation department is saying that 15 crores. So chalo, Jai Mata Di, let's go to the court. Both sides will litigate on each other. Company will say that 4 crores. Taxation department will say that 15 crores. Fine. And then first the taxation department have to launch a forensic audit. Fine. Detailed forensic audit, each and every minor details, all the communication, each and everything will be intercepted and it will be done. And that is a long process. It takes a lot of time. And if you are even able to prove that, ki no, it is 15 crore, again the other party is going to litigate you in the court. So this court case will be dragged the both side taxation department as well as whom? Company. Fine. For the long litigation in the court. So this is why usually what it is being said that both sides should try to be as possible as cooperative. You should promise to the taxation department ki I am trying to follow the taxation rules as much as good faith possible. And taxation department also going to understand ki for a company going to be 100% true is not possible. Every company will try to save some tax. So I have to understand that every company is going to try to save some tax. So I will be not too harsh on them, because if I will be too harsh on them, then in order to prove my point, I have to involve in lengthy process of auditing and then court litigation. So it is better to understand the practical thing, ki yes, to allow companies to save some tax to certain extent, but at the same time, companies also have to understand that taxation department have a legitimate demand of collecting a tax. So here the safe harbor thing will come. So company which can be claim how much? 80 crores. Company will not claim 80 crores. Company will claim only how much? 50 crores. So if they will claim 50 crores, then their net profit, fine, book profit minus net profit will be how much? 50 crores. And on 50 crore, tax will be applicable to how much? 20%. That will be how much? 10 crores. 10 crores. And their corporate tax will be, was how much? 4 crores. Fine. 4 crores. Now in this case, initially company have paid how much? 15 crores they have paid. But under the safe harboring, they said that I am accepting my tax liability of how much? 10 crores. So now taxation department have how much? 5 crore with themselves of whom? Company. So this 5 crore is not going to return to that company. It will be not returned to that company. It will be called as MAT credit. This MAT credit will be remain with whom? Taxation department, which can be adjusted in next year. It can be adjusted in the next year. Fine. So this is what happens at present right now with respect to MAT calculations. Fine. Now government is saying that we are going to reduce the rate of minimum alternative tax from 15% to how much? 14%. Two things are here. Thing number one, which we have already written. Here 15%, now it is going to be how much? 14%. But if it is going to be 14% and you have any MAT credit with whom? Government. Then that MAT credit will be automatically 45. You are not going to get any credit to be used next year. So if you are going for 14% of MAT rather than going for 15% of MAT, then the MAT credit for next financial year will be not applicable. Fine. Here government have played a game. What game government have played, that need to be understand, because earlier there is a concept of tax havens like Ireland. So what happened? India is applying the tax of corporate tax of 20% rate, right? So in India, corporate tax, suppose that it is 20% rate. If Ireland is charging tax rate of only 10%, company will be going to be in India, or they will transfer their headquarters at where? Ireland. And in today's world, for IT companies, for most of the companies who are not heavily manufacturing based company, for example, steel company. So steel company is not going to move their production ability. But those companies like Amazon, their entire operations running through the internet, fine. So they will shift their base at where? Ireland. And this is called base erosion and profit shifting. Base erosion, a company is of which country based? US based. But that US base, Amazon, what they have did? They have shifted their base to Ireland. Fine. So this is called base erosion and profit shifting. Fine. Base erosion and profit shifting. So your base is at US, but you have shifted your base to where? Ireland. And with this, you have removed the tax. So in US, the tax rate is supposed at 26%. In Ireland, it is just 8%. So you have shifted your base, you have shifted your global profit from US base to where? Ireland, and you started able to saving the tax. So in this regard, OECD, fine, OECD have taken the initiative for global minimum tax. Means they have forced every country, you should have a minimum global tax. And they have fixed that minimum global tax to how much? 15%. Every country should have global minimum tax of how much? 15%. Now, if you see global minimum tax of 15%, but government of India have did what? From 15% to how much? 14%. So it is against the OECD rule. It is against the OECD rule. Answer is no. Why answer is no? Because OECD rule of 15%. तुम्हें पता है तो चुप रहो एकदम. अगर पता है तो बोलो, तो मुंह बंद रखो. That 15% rule is basically for corporate tax. Global minimum tax of corporate tax will be how much? 15%. Number one. Number two, they are saying that what government of India is pointing, ki okay, even if we are reducing the tax rate, global minimum tax rate from 15% to 14%, but at the same time, we are also abolishing what? MAT credit. We are also abolishing at MAT credit. So for all those companies who have their tax rate at corporate tax and their MAT. So you are calculating your corporate tax, you are going to calculate your MAT. If you found that your MAT and your corporate tax is going to be near, fine. So switch to which country? India. Why India? Because in India, if you will apply yourself in a MAT, so minimum alternative tax is going to be at what rate? 14% rate. And MAT credit will become when? When MAT credit will come? So MAT credit. So what is MAT credit? Your MAT minus your corporate tax. So in our case, what was the MAT value? 15 crores, fine, 15 crores, and corporate tax 4 crores. But later on we have tried to revise it, but just consider it is how much? 4 crore. So how much MAT credit will be there? 11 crores. So this MAT credit was earlier able to carry forward, but now as per the new rule, if you will go for the 14% MAT, then in that case you will be not able to take advantage of your MAT credit for next financial year. What it means that? It means that you have to present your MAT in such a way so that will be there no MAT credit is going to be created. So government have went for very clever way of getting more squeeze of tax. Fine. So first of all, they are giving you an opportunity. Wherever you are paying the tax, shift your tax base to where? India. But after shifting the tax base, you have to make sure that you are going to pay at least how much? 14%. 14% tax need to be paid. अब देखो 14% or 20%, कौन सा ज़्यादा है? Which one is higher? 20% looks higher. But while going for 20% calculation, what you are doing? When I am calculating this 20%, when I am calculating this 20%, I am doing what? Book profit minus deductions. Fine. Fine. So I am using all these three. So my net profit, fine, my net profit is going to be taxed at what rate? 20%. And even book profit, suppose even if it is going to be taxed at what rate? 12% rate. Entire thing depends upon exemption, rebate and deductions. So if I will claim for more exemption, rebate and deductions, fine, automatically my net profit is going to be less. And if I will claim for less rebate, deductions and exemptions, automatically the difference between net profit and the book profit is going to be narrow. And if I will increase it, the gap between book profit and net profit is going to be wider. So taxation department told you कि भाई, see, let's go for safe harboring. Fine. Safe harboring means if you are going to follow certain rules. एक और example लेता हूं आपको. If you are wearing a helmet, fine. If you are wearing a helmet and you are following the red light rule, so will you be challaned? Usually not. Overspeeding might be possible. Fine. So you are not overspeeding. Fine. You are having a helmet, you are following the red light rule, each and everything, then you are not supposed to be challaned. But as per the rule, if you are driving any motorized vehicle which is having gears, shoes are must. तो आपके shoes पे भी चालान कट सकता है. But taxation department is saying that कि okay, fine. You are having a helmet, you are having your driving license, fine. Though speed is little bit higher side, but okay. At least in Hyderabad, you are doing all those things. Fine. So go ahead. Despite you are not following all the rules. Okay. Despite you are not following all the rules, because taxation department also know that enforcing such a minor rules, it is not exactly possible. And if I am trying to put this rule, किसका किसका जूता check करोगे? How many of the riders you are going to check the shoes? Fine. And if you are going to check the shoes of each and every rider, it is going to be massive traffic jam in the entire city. And court and politicians are going to scold on you. What nonsense you are doing. So same thing happens in the taxation. So we know that means future Indian Revenue Services officials, all of you have to know that all the rules are not possible to implement, and that is why there is a proposal of safe harboring. Fine. Safe harboring समझ में आया? Have you understood what safe harboring means? Clear? So safe harboring. Now the safe harboring is basically to attract whom? Those who are having huge volume of trade. Fine. So first of all, government is providing a lot of opportunity to you to shift your manufacturing at where? India. Fine. Now government have also thrown a fishing hook towards you. कि अब तो आ जाओ. We have also reduced the tax. Though government of India is highly notorious. मतलब notoriousness की हद है. एक लेवल पे आप जाके notorious हो जाते हो. Latest example इसी बार के बजट का. Few years back, government have launched a sovereign gold bond scheme. Fine. Sovereign gold bonds. And that sovereign gold bonds can be purchased directly through the RBI. Fine. Under retail direct scheme of RBI, you can directly purchase this sovereign gold bond from whom? RBI. Now, suppose you have purchased and you have invested somewhere around 1 lakh rupees. Fine. So it is a bond. Fine. It is a bond, and bond is going to mature, suppose that after 7 years. So we know that any asset value is going to rise. If the value of any asset is going to rise, then there will be called as a capital gain. Fine. So you have a capital of 1 lakh, you have invested, and that capital is going to be gained, suppose at 5 lakh rupees after 7 years. Fine. So there is a capital gain of how much? 4 lakh, and it will be taxable. Capital gain tax. If it is a 1 year, short-term capital gain. If more than 1 year, it is going to be the long-term capital gain. So capital gain tax लगेगा. But when government have launched that scheme, government said that if you will purchase sovereign gold bond, there will be no capital gain tax. अभी भी आरबीआई की साइट पे पड़ा हुआ था. अभी 2 दिन पहले उड़ाया उन्होंने. Fine. When there is a lot of murmuring and there are a lot of cry for this, then they have removed it. Fine. But it was there. Fine. There will be no capital gain. Now, in the budget speech, government have not made anything. But now what government is saying that if you have purchased sovereign gold bond only from RBI, then it will be not liable for capital gains. But if you have purchased from open market, it will be liable for capital gains. Whereas in the initial round, when the government have launched that scheme, government have outrightly said that if you will purchase sovereign gold bond, it will be not liable for capital gain tax. Ab sara chakkar hai kya? All these things is happening in why? So government said that, see, why you are purchasing physical gold? Don't purchase a physical gold. Let's purchase a gold bond. So rather than purchasing gold worth 1 lakh rupees, in the physical form, you have to purchase a bond which is having the same value. So just go back to 7 years. Fine. So just go back to 7 years, and at that time 50,000 rupees per 10 gram. So you have purchased 20 gram of gold. You have purchased 20 gram of the gold 7 years back. Fine. Now government is saying that if you will purchase a gold, it will be remain gold. But what I'm offering you, don't purchase a physical gold. Purchase a gold bond worth how much? 1 lakh. For how many years? 7 years. So at that time, 50,000 rupees per 10 gram. Fine. So government thought that kitna hi badhega? 50,000 rupees 7 years back. 7 years back means how many years? 19 ले लेते हैं. 2018 ले लो. Fine. 2018. So in 2018, gold price, suppose that it was 50,000 rupees per 10 gram. So government thought that maximum to maximum it will go to 70,000, 80,000. It will 10 gram is going to be 70 to 80,000. Koi baat nahi. We will pay you the value. So if you are purchasing gold in 2018 at 50,000 rupees per 10 gram, government is saying that don't waste your money on the physical gold. Purchase a gold bond. When the gold bond is going to mature after 7 years, 2026, whatever the price of the gold, we will pay you. Fine. And if gold price will be less, we will pay you the interest of 7% annual basis. So suppose that today gold price is going to be 40,000 rupees per 10 gram. So government will calculate 7% interest of each and every year, value will be accumulated and money will be given to you. So it is assured you are going to get how much? Minimum 7% interest you are going to earn. But in that last 6-7 years, thanks to 𝐷𝐸, COVID, fine. Then supply chain crisis, Russia-Ukraine war, all these things happened and the gold price reached to 1,60,000 per 10 gram. Now government is like, why? Because 50,000 rupees, now you have to pay how much? 1,68,000 rupees. Means government have to pay 1,18,000 rupees on every 10 gram of the gold. So this is why government is getting like कि भाई सब चला जाएगा and everything is going to be gone. Fine. So at least we should get something. So government, that is why in the because you have mentioned in the RBI's website. So people may not sue the government of India, but they will go to the RBI. RBI, they will take the court. Why? Because RBI have mentioned that it is free from capital gain tax. So when the document was released by the RBI, fine, document was released by the RBI, it was clearly mentioned that it is exempted from capital gain tax, and that is why many of the people have invested. This is a problem in the country like India, where people do not have an awareness. Fine, people do not have an awareness at that point of time, so they are unaware. Fine, they are unaware. Otherwise, sovereign gold bond, if you have a proper awareness, government of India is going to bankrupt today. Seriously, if people have a proper awareness that this kind of a scheme is there, fine, and you have seen the future, that Putin is going to have a war with whom? Ukraine, and gold prices are going to rise in such a way, everyone is going to sell all the gold in their home and they will purchase sovereign gold bond. And why sovereign? Because it is guaranteed by whom? Government of India. Government of India, not RBI. Guaranteed by whom? Sovereign guarantee. So sovereign guarantee means guaranteed by whom? Government of India. So whatever the value at the time of maturity you are going to get, that is guaranteed by whom? Government of India. Approximate this year only government have to pay somewhere around 3.5 lakh crores because of the maturity of sovereign gold bonds. This year only. और अभी तो पार्टी शुरू हुई है. Fine, this is just a beginning. And this is going to, that is why government have stopped the sovereign gold bond. Otherwise, government was just thumping that we have decreased the gold import for the India because of the very hit sovereign gold bond scheme. So at a point of time after crude oil, we are importing the second largest thing is gold. Still on top, 2-3 gold. Fine. So government want to decrease the import of the gold. Why? Because gold is a metal, it is of no use. It is of no use. Don't purchase it. Fine. Don't insist to people to purchase it. But they are mad. Gold. Fine. So this madness, though Chinese have crossed this madness, at a point of time, India was the world's largest importer of the gold, but now it is shifted to whom? China. But वो China है. China है तो मतलब वो आपके घर से भी निकलवा लेगा. If you have gold in your house, then the government can take your gold also because it's a Chinese government. Indian government नहीं कर सकता है. Fundamental right है, Supreme Court है, High Court है, fine, political parties हैं, everyone is there. How you can do that? Fine, it is not possible. So, but government have did this in this budget. So if you have purchase of sovereign gold bond from RBI, there will be no capital gain tax, but if you have purchase of sovereign gold bond from open market, then you have to pay the capital gain tax. And this is utter nonsense. You can't do this. And probably it is going to be contested in the court. Probably because rule is not notified yet. Government have made a proposal. Achha, one more thing I have to just want to let you know in the budget point. In the budget, sometimes government deliberately put some proposals, which is going to make public uncomfortable. Now government see to what extent public is going to be uncomfortable. If government found that ki public is too uncomfortable, making a lot of noise, protests are happening, all these things are happening, then government will say that ki under the leadership of our Honorable Prime Minister, government have decided to roll back that plan. तो आपने बजट से क्या कर लिया? Roll back कर लिया. You have announced, but you will not present that proposal. You will amend the bill of finance and you will remove that proposal. Multiple times this happened. Almost every second, third year, government do this. They will initiate some proposal, but before it is going to be implemented, they will recall it. Fine, recall it because of the huge protest. As of right now, government have not notified it. After notifying it, let's see how it is going to be taken by the public. Because this time it is not just a matter of protest, but it can be a legal litigation against the government of India. Because when you have launched that sovereign gold bond, you have not put any such condition where sovereign gold bond purchased by the RBI and sovereign gold bond purchased in the open market will be treated separately. If you want a tax proposal, क्योंकि tax का rule है, very important rule, there should be a clarity on whom and why and how much tax is going to be implemented. And all three rules of the tax is being violated in this new norm under the budget 2026-2027 regarding sovereign gold bond. ठीक है? And it is consistently in the news from last September-October, sovereign gold bond. फाइन, तो प्लीज आप एक बार एक असाइनमेंट टाइप में लिख लो, जस्ट ट्राई टू गैदर मोर इंफॉर्मेशन अबाउट सॉवरेन गोल्ड बॉन्ड. फाइन, सॉवरेन गोल्ड बॉन्ड, मोर इंफॉर्मेशन इज रिक्वायर्ड. फाइन. And as I said that yesterday before winding up the lecture, certain things I will provide in the form of notes. ठीक है? तो sovereign gold bond, just please remind someone after the class, so I will add in that additional notes. I will provide you the details of sovereign gold bond. Just remind me after the class, so I will add. Tomorrow or day after tomorrow, you will get the PDF in which all the other proposals of the budget, which we are not going to discuss in our lecture, I'll provide in the PDF. Fine. So sovereign gold bond, but you should have an awareness of it. The government have made this proposal. What proposal? Sovereign. You can write it there. According to the budget proposal. According to budget proposal. 2026-2027, 2026-2027, sovereign gold bonds directly purchased from RBI, sovereign gold bonds directly purchased from RBI will be remain exempted from capital gain tax, remain exempted from capital gain tax. However, bonds purchased from open market, liable for capital gain tax. Okay, now see the rationale why government is putting this thing. So actually when the sovereign gold bond was released by the government, so for initial 3-4 years there was no marketability of bonds. And in this context, understand this concept of bond itself. So in India, bonds are less used in the secondary market. What is secondary market? What is primary market? So when you purchase a security directly from the company, then it is called as a primary market. After purchasing, two options. Either you can hold it or you can sell it. So if you are going to sell it and it is going to be sold and purchased multiple times, that will be called as secondary market. Fine. Whereas if it is being purchased and it is not being used for further trading purpose, it will be not going to be liquid in the secondary market. Fine. So it is not in the secondary market. Now the problem in India is, we have to discuss in this budget also, because government have made a proposal for corporate bonds. Government have made a proposal for corporate bonds. The point you have mentioned, I'll explain. So corporate bonds. So corporate bonds, fine. But understand the broader nature of bond market in India. We'll discuss the corporate bond. But first understand the broader nature of bond market. Usually when the shares, or you can say equity. So if a company want to raise a money from public, so if a company want to raise a money from public, they have two options. They can go for borrowings, or they can provide their shareholding. So borrowing is through bonds, and this share in the form of equity. So you can purchase any of, either you can purchase bond or you can purchase equity, and money will go to whom? Company. Fine. After purchasing, again, this purchasing will be called as primary market, where company and investor are interacting. So who interacts in the primary market? Company and investors. Now, once it is being purchased by a individual or an organization, now it is up to them whether they want to hold it or they want to sell it. So if it is going to that secondary market, fine. So it is being seen that in India, this share market, the secondary market is properly developed for equity market. But for the bond, it is found that the bond market is highly non-liquid in secondary market. Usually after purchasing the bond, people will prefer to hold it rather than prefer to sell it. So this is why the secondary market in India is not proper developed. That is the specific case of sovereign gold bond. So those who have purchased, fine, when government launched the sovereign gold bond scheme, so for initial 3-4 years, they are not in the demand. Fine, they are not in the demand. But when the price of gold, which was earlier rising with 6-7% rate, fine. So if you see the phase from 2010 to 2014, 15, 16, 17, 18, 19, the gold price was rising only with 6-7% interest rate. So government thought that ki 8% rate se gold ka price increase ho raha hai. So gold price is rising annually 8% rate. And on the bond, on an average, we are providing 7.75%. So government of India is providing interest rate on bond 7.75%, and the gold price are rising with 8% rate. So that is why government thought that if we will launch this sovereign gold bond, it will help us in two ways. Number one, the most important thing, we can reduce the import of gold. So we can save a lot of money in the imports. Fine. And precious foreign exchange can be saved. Rupee will be less exposed. And ultimately, if rupee is going to be more exposed, how rupee will be more exposed? If we are going to import too much gold, so in order to purchase the gold, we will give the rupee and take the dollar. So we have to convert our rupee into dollar in order to purchase the gold from international market. So more rupee will be there, so rupee value will be depreciate. But if we are going to introduce a sovereign gold bond, it is going to help the public to switch from from physical gold to paper gold. So even 8% need to be given, go ahead. So this is why government have launched. But from 2018-19 onwards, what happened? Gold prices started increasing. So those who was having the gold bonds, sovereign gold bonds, those who was having, fine. Now your investment is growing with 8% earlier. So you have invested in something and your investment is going with 8% annual rate. And all of a sudden your investment started growing with 20% rate. But there is no certainty it will be remain going to grow with 20% rate, or again it is going to be 8% rate. So some people कि नहीं भाई रखो 20% ही क्या हो रहा है, राइज कर रहा है. But some people who want to encash that opportunity as soon as possible. So many people who are having that sovereign gold bond for 4-5 years in their pocket, they saw the opportunity and they started trading in which market? Secondary market. So government observed that for 4-5 years when the gold price was normally rising, gold bond in the secondary market. Now people are trying to use this opportunity to get maximum benefit. So that is a capital gain. Fine. So this is why government is saying that you have to pay the capital gain. And this is why government is saying that on RBI, if you have purchased from the RBI, it's fine. But if you have purchased from the secondary market से purchase किया है अगर आपने, if you have purchased the secondary market, and see, in the secondary market in India, bonds are not being purchased. So if something is not being purchased from a particular place, and in the special circumstances you have purchased, that means you are looking some benefit, and that is why it is a capital gain and you have to pay. This is government's logic. I'm not trying to defend the government, but I'm just trying to tell what government is using the logic in this case. Understood? So sovereign gold bond become a headache for the government. They want to remove one headache, but they have created two more headaches on their already a headache. Fine. So this is the sovereign gold bond and gold bond scheme. Now understand the nature of corporate bonds. So as I said that corporates can raise the money through borrowings and through selling of shares. Selling of the shares will be remain limited. If you want money on the frequent basis and you are keep selling your shares, fine, all of the shares of your company will be sold and you will be no more remain owner in that company. So after certain limit, company cannot sell their shares. So company will go for borrowings, and for the borrowings they issue a bond, and that bond is called as corporate bonds. Fine, corporate bonds. So suppose corporate bond is issued by ITC for 15 years. ITC ने 15 years का bond issue किया, and they said that through this bond sale we want to raise 15,000 crores from the market. We want to raise 15,000 crores from the market, and the bond maturity is 15 years. Life Insurance Corporation of India have purchased all of those 15,000 crore rupees bond. Fine. So entire 15,000 crore rupees bond of ITC is purchased by whom? Life Insurance Corporation of India. Now LIC can hold it or LIC can sell it. But what LIC is going to do? Hold it. So because of this, the bond market, the corporate bond market become non-liquid in India. In which market? Secondary market. Fine, secondary market. If it is locked there, fine, if it is locked there, then the investors are not going to use this bond as a source of making income. Fine. So if investors are not interested in some instrument, investors will directly look at the company? Answer is no. And this is why over the period of time, companies are relied only on these companies to fund the borrowings. They will go to whom? Banks. Fine. They will go to the banks. They will go to NBFCs. They will go to the insurance companies. Why? Because company is planning to launch at where? Market. But they know that once it will reach to the market, it is not going to be beneficial for those people who trade. आपने bond purchase किया. Fine, you have purchased a bond. Now you can hold that bond or you can sell that bond. Usually in the case of shares, what happened? So you have purchased a share of a prominent company who is making profits. Fine. But the share price of that company which you hold rise by 10%. So you will hold the shares or you will sell the shares? Some people will hold, but many people will sell it. And that is why investors are interested to sell and purchase shares. But that is not same in the case of bond market. So bond market is illiquid. So investors are not showing their interest in the bond market. So if they will not show the interest in the bond market, then the corporate borrower who want to get the money, he know that if I will launch the bond for the public will not purchase. Why public will not purchase? Public is purchasing certain asset. I am purchasing certain thing. When its value will rise, I will sell it, I will make money, and I will invest in another thing. So I will start investment with the 1 lakh rupees in the market. I will purchase certain assets. When the assets value are going to rise to 15%, I will sell it. And I'll get how much? 1,15,000. Now I will invest again 1,15,000. Again its value is going to rise. I will sell it. Again I will purchase. This is how people do trade in the market. Yes or no? If no, that means you do not know the market. But market works actually in this way. And this is actually called trading. Selling and purchasing, selling and purchasing. But if any instrument which is not being sold and purchased, why I will put my money? So this is why the corporate borrowers are forced to go to whom? Banks, insurance companies. And they know that they are in trouble. They need money and market is not liquid. So they will say that you have to pay higher interest. So because they have to pay higher interest, their profitability decreases. This is one reason what I have told you in the very first lecture that Indian economy is driven by public expenditure rather than private expenditure, because corporate borrowings is higher. In order to solve this issue, government have introduced 2 things. Fine. In order to make corporate bond market attractive, government have introduced 2 things. Please write there in the notebook. Right. In order to make corporate bond market more attractive, in order to make corporate bond market more attractive, Budget 26-27 proposed market making and total return swap. Total return swap. Underline these 2 terms. Market making and total return swap as a tool to make bond market more attractive. As a tool to make bond market more attractive. First, write what is market making. Fine. So आपने कभी किया है market making? Fine. Have you ever did the making? Matchmaking तो किया ही होगा. Matchmaking. Fine. So what is matchmaking? Huh? Dating sites. Huh? So what some people will do? Fine. Some people will involve in this activity. उनको मजा आता है, फिर दोनों साइड से पिटते हैं. फाइन. बोथ साइड. अभी इंस्टाग्राम पे आजकल बहुत पॉपुलर रील चल रहा है. फाइन. जिसमें यंग कपल दे गॉट मैरिड आफ्टर रनिंग अवे फ्रॉम देयर होम एंड दे अपलोडेड देयर picture of getting married, and they have said that thank you my friend, because of only you we got engaged. And now entire both families trying to find that person कि कौन था भाई, इसको मारो, हाथ से नहीं मारो इसको, जो और कोई भी हथियार मिले उससे मारो इसको. So that is making. Fine. So you are going to initiate something. Fine. You are going to initiate something and you will be a reason for rise or happening of something. Then you will be called as maker. So if a company have launched, कोई भी random company है, fine. ABCD, my favorite company. Fine. So ABCD company is there. DB आ जाता है. Fine. Fine. ABCD is a company and they have launched their shares. Will you purchase the shares? Yes or no? No. Of course no. You should not invest your money without any proper credibility. But now if a certain company is going to announce, fine, suppose that a investment bank, Franklin Templeton, they have announced that we are going to invest somewhere around 30% in this company. Franklin Templeton, they are one of the world's biggest investor. And if they are investing huge amount, 30%, and they are investing 2,400 crores, fine. Do you think they are idiot like you? No. That means you are idiot. Fine. Why you are idiot? Because you refuse to invest in that company. That is why you are idiot. But Franklin Templeton, after doing the calculation, they found that it is a great opportunity to invest here. Fine. So that is why they are going to purchase 30% in that company. Now you will purchase? Yes. If not, you are still idiot. So actually here we have gone for purchase because of trusting of whom? Franklin Templeton Group. They are purchasing, that means they see the long-term growth in this company. So here Franklin Templeton, they have not just made an investment, they acted as a market maker. Fine. आप उसको एक और नाम से जानते हो, सोशल मीडिया इन्फ्लुएंसर. फाइन. आजकल देखो जब वो वीडियो चल रहा होता है ऐसे एडवर्टाइजमेंट नहीं आएगा. सो दे आर नॉट गोइंग टू मेक अ प्रॉपर एडवर्टाइजमेंट बिकॉज दैट एडवर्टाइजमेंट इज गोइंग टू इन द पॉकेट ऑफ गूगल फर्स्ट. So they have find the new trick. So they are giving their video, and in that video in between they will say that about the some other product. Fine, some other product. Majority of the players or all famous celebrities, you will never find a proper brand they are wearing until unless that brand have paid to them for branding their good. Otherwise you will never found. So simple. Not simple. They are deliberately not doing that. Fine. They deliberately do not do that because they know that it can be make a source of income. So imagine that you are Lionel Messi and a photo can give you 10 lakh rupees in India. Fine. Are you going to allow anyone to click your picture? No. You will never going to allow anyone to click your picture because that picture clicking might be a generous thing for you. But someone can get how much? 10 lakh rupees. आपको अगर 10 रुपए भी मिलेंगे तो भी आप खड़े हो जाओगे, हाँ भाई खींचो. Right? So this is what they are actually such an influencers. They can influence the market. So this is called market making. अभी समझ में आया मार्केट मेकिंग का? तो देयर आर सर्टेन कंपनीज, ऑर्गेनाइजेशंस, ग्रुप्स, दे कैन एक्ट एज ए मार्केट मेकर. फाइन. नाउ राइट देयर, a market making framework is a system. A market making framework is a system where specific financial institutions in brackets market maker in brackets market maker bracket close are incentivized INCENTIVIZED, incentivized or mandated to provide continuous buy and sell quota for specific securities. Buy and sell quota for specific securities. Now write in the next line, under new budget proposal, government will provide these market makers with a suitable access to fund for making market for for making market for corporate bonds. This will ensure that even if there is no immediate buyer, this will ensure that if there will be no immediate buyer, no immediate natural buyer actually, no immediate natural buyer, the market maker will step in to provide liquidity. Example देखो, see the example. Here we have taken ABC company. Fine, we have taken the ABC company. Now, who have invested 2,400 crores? Franklin Templeton. Fine. So that group have agreed to invest. Actually, they also not want to invest. They are also not interested to invest. Fine. They are feeling that might be a gamble. But government is saying that if you will purchase, I will provide the incentive of 400 crores. Fine. I will provide you the incentive of some 400 crores. So that means now if the Franklin Templeton is going to invest, and before investing, they saw that there is a minus risk of 200 crores. So they saw that if we will invest 2,400 crore, and in the worst case, we are going to lose how much? 200 crores. Fine. And that is why we are not interested to invest. Fine. So government said that okay, we are going to give you how much? 400 crores in case of loss. So if you lose, we will give you 400 crores. That means you will be definitely in the minimum profit of how much? 200 crores. Why? Even if you are going to have a loss of 200 crores. So your asset value, which is right now how much? 2,400 crores. And if you are going to loss, it will reduce to how much? 2,200 crores. 2,200 crores. But government is ready to provide incentive of how much? 400 crores. So even if you are going to at a loss of 2,200 crores, fine, but government will provide you the subsidy of or the incentive of how much? 400 crores. So automatically you will be remain in the profit. So now Franklin Templeton is interested to invest their money in this. So government is doing this for corporate bond market in India. So this is what government is trying to make an effort. Let's invite or let's try to attract the market maker, and if market maker will be there, then we will provide the incentive to the market makers. This is the government effort. Understood? Example लिख लो और ना भूल जाओगे. Write an example, proper example. Suppose a pension fund hold 500 crore worth. Suppose a pension fund holds 500 crore worth of 10-year bonds. 10-year bonds issued by Indian Infrastructure Company. And they need 50 crore rupees. They need 50 crore rupees on emergency basis to meet certain payouts. But it is a corporate bond. But as it is a corporate bond, there is no natural buyer. Hence, there will be only vulture buyer. There will be only vulture buyer. See, how much bond they are holding? 500 crores. Fine. They immediately need to pay some money for their expenses. How much? 50 crores. So they are holding the bond of how much? 500 crores. But because there is no natural buyer in the market, because market is illiquid, secondary market do not work in the India corporate bond market. So they are not having any natural buyer from to whom they can sell the bond worth 50 crores. They want to sell the bond worth 50 crores. So if there is no natural buyer, then you have to approach someone. Please try to understand, I need 50 crores and against that, I will give you the bond. And you saw that he have a bond and how much worth? 500 crores worth bond he have. So technically he have 500 crores, but in the form of bonds. And he is in desperate need of money. So you will say that, okay, I'll give you 50 crores, but you have to give me the bond worth 55 crores. I can give you the money. How much money you need? 50 crores, I'll give you. But in return, I need the bond worth how much? 55 crores. And you are in the dire need of money. And market do not have a natural buyers. Then what will happen? You have to give up how much? 55 crore bond worth bond. This is the problem in the corporate bond market. And that is why usually no one want to purchase a corporate bond. Understood? Right, further in the same example. Vulture buyer offering a price 10% below the fair value. However, under the new budget proposal, a designated bank acting as a market maker, is required to offer continuous buy price. So have you, anyone who have never watched Tom and Jerry? Never watched the Tom and Jerry? Acha, most of you have watched. So in the fight of Tom and Jerry, fine. So there is a dog. What is the name of the dog? Spike. So there is a Spike. So once the Spike have a spike on his leg, fine. And ultimately who rescued him? Jerry have rescued him. So he said that whenever you are in crisis, just whistle and I will be there. Fine. So you have to whistle and I will be there. So same Spike is the bank right now in the role of this market maker. The moment the company, fine, the pension fund who want immediately 50 crores, they hold the bond of whom? They hold the bond of a company, India Infrastructure Company. Fine. So this company need how much? 500 crores. They need how much? 500 crores. And they issued a bond. And this bond is purchased by pension fund. So pension fund have purchased, but the bond duration is how much? 15 years. They purchased the bond in year 2020. They purchased the bond in 2020. In 2026, this pension fund need immediate how much? 50 crores. But they are not getting any buyer who is ready to purchase bond worth 50 crore out of this 500 crore. So they have to go certain people, and that certain people, they are saying that I can purchase 50 crore rupees worth bond, but you have to give me bond worth how much? 55 crores. Fine. So in order to solve this problem, government is saying that we are going to designate some bank. For example, they have designated PNB. So what PNB will do in this 15-year process? So PNB is consistently going to offer some of the shares, some of the bonds will be purchased by whom? Pension fund. So the bond which is with the pension fund, that bond will be always offer of by whom? PNB. So PNB is always going to offer the buy. So this pension fund need not to go to that vulture buyer because natural buyer is available. So how PNB is acting? PNB is acting as a market maker, because time to time it is offering the buy of whom? Pension funds. Fine. So अब देखो इसका impact क्या होगा? Because India infrastructure company need how much? Up now see, focus here. Now see the entire scenario from this point. If PNB is not here, fine. Imagine PNB is not here. If PNB is not here, that means no market maker. No market maker means pension fund may face this problem. Pension fund may face this problem whenever they have to pay out and they want to sell the bond, they cannot sell. So the moment in 2020, fine, India Infrastructure Company have offered their bonds to whom? Pension fund. Pension will say that, sorry, no, I am not interested because my money will be locked. And maybe if I need money, I will not get the money in between. I will not purchase. Then infrastructure company said that, okay, I will offer you higher interest. Purchase it, please. So India Infrastructure Company, they have offered higher interest rate to pension fund, only then they purchased. Fine. Now, if the market maker is available, bond can be liquidated easily. Now pension fund cannot give this excuse to whom? Infrastructure company, ki I need higher interest because your bond is non-liquid. Earlier bond was not liquid. Why? Because no one is there. And might be they end in the loss. But now, with the availability of whom? PNB. They are continuously going to offer a buy, and they are designated by whom? Government of India. So you cannot say that ki no, it might be not available. So it is available. So actually the corporate borrowings, which are very difficult for corporate borrowers in India, that will go little bit easy. And since 2013 government is making such efforts. आज से एफर्ट नहीं हो रहा है इंडिया के अंदर. Corporate bond market, Dr. Raghuram Govindarajan, when he became the RBI governor, since then Indian government is on mission. Whereas corporate borrowing is very common and highly liquid in the US market. वहां पे highly liquid है. And not only US market, majority of the market economies, they have highly liquid corporate bond market. But India is not. And this is one of the constraints which government of India want to solve again and again. And this is actually a desperate effort. ये जो effort है ना government of India का, it is not a normal effort. It is actually a desperate effort. कि you are ready to provide the incentive also. कि हम देंगे incentive, जाओ. So like you have pushed the manufacturing. Fine. आपने manufacturing को push किया था by providing the PLI. Production link scheme. Production करो, and if you show the production, I'll give the incentive. Similarly, you are doing the same thing at where? To make market corporate bonds more marketable. समझ में आया? Clear? अब देखो बजट में सिर्फ एक लाइन में लिखा हुआ था. If you see in the budget copy, they have just mentioned only in one line. वो सिर्फ एक लाइन का mention है यहाँ पर. In a single line, they have made a mention that we are going to introduce this market system as well as this thing. See here, they have mentioned introduction of market making framework and total return swap on corporate bond. मेरे भी समझ में नहीं आया था. He asked me on the very first day कि sir what is it? I told him कि भाई I need time to understand it. Then I also going to explain you as well as in the class. So this is what we have to make an effort in the economy. Fine, here every time something new will come and you have to work very hard in order to understand. तो ऐसा नहीं है कि सो के उठ के आ गया और पढ़ा दिया. एफर्ट पढ़ाने में भी लगता है. तो I'm just trying to tell you that if I need to make that effort, you need to make more effort in order to revise, otherwise it will be vanished. Single number ka fight hai. Fine. For each and every number, you have to fight like a warrior. Give your exact 100% in order to extract the mark. Okay? Ha.
Why is the government taking this? Like all the banks are
Banks, see, government do not want to expose the bank. Fine. Government do not want to expose the bank because banks are also very clever. Banks are also charging very high interest rate. So these pension funds, they are charging very high interest rate. Fine. So government is taking a risk to initiate the market. Government is not going to take a risk for the long term.
Yes, but still for initiating the if we compare it with PLS like
40,000 crore ka incentive tha usme. Fine, which finally reached to 2.5 lakh crores. And in comparison to that, if your government is giving to 5,000 crores, that is nothing. So if you have given 2.5 lakh crores just for the manufacturing purpose, you will manufacture, I'll give you the incentive. Fine. So here, government is not doing any charity. Government is doing very right work. And such amount of risk should be taken by the government in order to make any market more liquid. So I don't think so that there is an unnecessary risk is taken by the government. It is well valid risk. In fact, government have to take it 10 years back. Aaj nahi lena tha, 10 saal pehle lena tha. They are very late because they came to know all these things happening in the world market recently. So majority of the instruments what you see in our capital market, आप कोई भी instrument देख लो, चाहे repo देख लो, कुछ भी देख लो, anything, that is not our indigenous. Certain countries have implemented, we have checked that, we have tried to do in the pilot project and it works, then we employed in our country. Fine. Now write this one. Total return swap. Give a heading. Total return swap. Right? Government have introduced total return swap. Government have introduced total return swap for the purpose of allowing investors, especially foreign portfolio investors and large insurance companies to gain exposure to high yield Indian corporate debt without administrative burden of holding bonds. Managing custody or dealing with local tax withholding. For example, a foreign portfolio investor want benefit of 9% interest on the bond of Indian company X. but they do not want to set up local account. But they do not want to set up local account. Local account means, so suppose an Indian company is offering a bond, fine, and on the bond they are offering the interest rate of 9%, and they are issuing the bond worth 1,000 crores. Okay, so if they are issuing bond worth 1,000 crore, 9% annual interest means every year you can earn how much? 90 crores. Fine. But for that purpose, you have to purchase the bond. And in order to purchase the bond, that foreign company have to register at where?
India.
Here. As a foreign portfolio investor, you have to open an account fulfilling all the regulatory requirements, and you have to take this thing. Fine. They want that bond, but they do not want to go for all local rules and regulations. Then they can go for this swap. Right further. This is where total return swap will be executed. Total return swap will be executed with an Indian bank. Suppose in this case SBI. Suppose in this case Indian bank is SBI, and investor is from Singapore. Foreign portfolio investor is from Singapore. Here SBI will say that, right? Here SBI will say that I will keep the bond on my books. But I will give you all the profit it makes. I will keep the bond on my books, but I will give you all the profit it makes. Fine. So bond is of how much worth? 1,000 crores. Interest rate is आप 8% मान लो, 9% ज्यादा हो गया था, 8% कर लेते हैं, 8%. Fine, 8%. So when this Singapore-based investor will purchase the bond, fine, bond will be remain with whom? SBI. And every year when the 80 crore interest will come, that entire interest will go to whom? Singapore investor. So what SBI is going to get? Do you remember that I have explained you in the fine detailed manner in those classes? For those which I have not explained it yet, usko side mein kar do. I'll explain that class also. I have explained you about ADR and GDR. Fine. So what was happening in the ADR and GDR? A American bank is going to hold. So similarly, what is going to happen here? SBI is saying that I will hold the bond. The bond which you want to purchase, you can purchase, I will hold on your behalf. I will hold the bond on your behalf. Fine. Why? Bond is fetching how much interest? 8% interest. Fine. And you are interested, but you do not want to be registered in India. Fine. As a foreign portfolio investor. Fine. So I will hold the bond on your behalf. And the entire profit I will transfer to you. You just have to pay me the rent holding this bond. So I will hold the bond on your behalf. Fine. I will hold the bond on your behalf. And what you need to do? You need to pay some fixed amount of rent for that phase. So suppose that rent is 5 crores annual. So rent is 5 crore. And if rent is 5 crore annual for the 1,000 crore rupees bond, so the foreign investor effectively going to make how much? 7.5% interest, which is still good interest rate in comparison to other bond market in the world, because other bond market in the world are highly liquid. They are highly liquid. So there you are going to get how much? 6.8, 6.9, 7.1. But here still you are going to get how much? 7.5. So Singapore investor said that, okay, done. I will pay you the rent of how much? 5 crore, and you have to hold the bond on my behalf. SBI say, okay, come after the lunch. No, in this case, they are not going to say come after the lunch, because you are an esteemed customer who is going to pay the rent of how much? 5 crore rupees on annual basis, just holding that bond. Fine. But what if that company who have issued that bond, they are saying that, sorry, I am not able to pay. Fine. Then Singapore investor will say that, bhai, mujhe kuch nahi malum. I don't know. You have to pay how much? 8%. SBI sayega, what SBI will do? SBI is going to say that, bhai, hum government of India ko nahi pay karte, apni public ko nahi pay karte, tumhe kya pay karenge? Fine. No, market do not works in this way. Market need proper clarity. So what is the clarity in this case? Please write there. So apne, what you have written, SBI says, I will keep the bond on my books, but I will give you all the profits it makes. Investor says, in exchange, I will pay. Investor says, in exchange, I will pay you a regular rental fees to cover your cost of holding it. Fine. Now, write the next line. The profit in brackets 8% interest collected by whom? SBI. Given to whom? Singapore investor. And Singapore investor will give 5 crores to whom? SBI. Fine. Now write further. The investor will pay SBI on floating interest rate. Floating interest rate. What is floating interest rate? You can write as a note, the interest rate which keep changing along with the market interest rate. The interest rate which is keep changing along with the market interest rate. Fine. So now understand here what it means that floating interest rate. So when that Singapore investor and the Indian company, suppose Indian company here, in this case, Indian company is National Highway Authority of India, NHAI. So NHAI consider this entire scenario in this way. NHAI need 1,000 crores. Okay? NHAI need 1,000 crores. And they are offering an interest rate of how much? 8%. They are offering the interest rate of how much? 8%. अब आपने वहां पे ये दिमाग नहीं लगाया कि it is floating interest rate or fixed interest rate. So investor asked to whom? Investor asked to NHAI whether this 8% is a floating interest rate or fixed interest rate. NHAI said that, what you want? अब क्या बोलोगे आप investor हो? You want floating interest rate or you want a fixed interest rate? सोच के बोलना. Usually what happened when you are given two choices and you have chosen one and the other person said that कि सोच के बोलना, most of the people change their opinion. Fine. So this is how people will play with your mind. Fine. They have not said in the beginning कि सोच के बोलना, think and then answer. Fine. So if you want a delayed response from anyone, fine. Suppose you are going to ask a question and you know that that person is brilliant and he is again going to immediately answer and you are not ready with your next question. Fine. So while making a question, just simply say that, see, you have to answer very carefully. अब वो सिंपल सा भी क्वेश्चन आप ट्राई करके देख लेना, एकदम सिंपल क्वेश्चन पूछो, बट टेल देम कि सी द नेक्स्ट क्वेश्चन इज डिपेंड अपॉन योर फर्स्ट आंसर, सो थिंक एंड देन आंसर. और वो सर खुजा रहा है कि पता नहीं क्या पूछ लेगा, ठीक है. सो दिस इज द डिलेइंग टैक्टिक. आंसर इज मोस्टली यू हैव टू गो फॉर फ्लोटिंग इंटरेस्ट रेट. Fine. And in fact, floating interest rate is being offered. Fixed interest rate usually do not offered because fixed interest rate is going to help one side over other side. So fixed interest rates are usually a zero-sum game. One is going to win and other is going to lose. Whereas in the floating interest rate, some benefit is going to be both sides. So initially, NHAI offered and it is well accepted by foreign investor 8% floating interest rate. अब वो floating है, it's floating, so sometimes it's going to float up, sometimes it float down. Float up, float down होगा. And this is what market needs, risk. Fine. So this risk is well anticipated by whom? Investor. Why? Investor have calculated. NHAI, National Highway Authority of India, means it is under Nitin Gadkari. He is another very influential minister in the India. And his past 10 years performance speaks his analytics. Fine. So rapid movement of the highways in India. He's a highway man of India. So they have did the analysis. They said, okay, go ahead. So their risk analytics said that, go ahead. So investor is ready to go ahead. They contact the SBI. SBI said that 5 crore we need. Fine, 5 crore we need on annual basis. That means how much Singapore investor firm is going to earn? 75 crores. Fine. Now, RBI have announced because of fall in the interest rate, because of the fall in the inflation rate, we are going to decrease interest rates. So repo rate क्या हो गया? Decrease. So interest rates are going to decrease. Now the interest rate which is offered to the Singaporean investor of 8%, now it reached to 7.5%. So how much they are going to get? How much they are going to get? 70 crores. Because 5 crore is fixed amount is going to be taken by whom? SBI. So profitability is decreased. Fine. But if the interest rates are going to rise from 8% to 8.5%, then the profitability is also going to increase. For whom? Singapore investor. But in both cases, SBI is happy. Why? Because they are getting how much? 5%. So SBI happy, investor is happy because he have to be happy because he has invested a huge amount. Fine. So this is also an investor's mindset. Fine. You have invested 1 crore rupees or you have invested 1,000 rupees. Fine. So you was expecting the return of 20%, but you got 8%. You will still happy. Fine. Some sort of sadness will be there, but still you are well above from any government scheme offered by the government of India. Fine. So investments are subject to market risk. Please read the offer document carefully before investing. Fine. इसीलिए बोला जाता है. Fine. But देखो market में calculations जो है ना, sharpest mind in the market. Fine. Sharpest mind in the market, वो कहां से दिमाग लगा के क्या निकाल लेंगे आपको पता भी नहीं चलेगा. They are just sitting with their laptop, their system, and they are ready to invest anywhere in the world where the opportunity is stuck. Fine. Closely watching the Japanese market, and in a single day, you have made not just crores, you have made 900 crores in a day. 900 crores in a day. Individual investor, single आदमी है वो, 900 crore रुपए लेके बैठ गया वो, single day. Single day ka. Why? Because he is very aware about the market thing is happening. So how he analyze the situation? Japanese market is consistently not performing. Japanese prime minister is of a nationalist. She's a nationalist. because she is outrightly speaking about Taiwan. In past 25 years, no Japanese prime minister have ever spoken such a outspoken manner with respect to whom? Taiwan. Something big is going to be happen. And the Japanese political system is highly fragile. No single party usually get a kind of a majority. And the nationalist people do not want any constraints. They never want any constraints. They want to run their government on their free hand, which is not in the case of the present political thing. So there is a huge possibility the prime minister is going to, and she's a first lady prime minister, fine, of the Japan, which shows that how patriarchal system of the Japan is. So if you have rose to that level in such a highly patriarchal system, so you don't care about anything. You are on your mission. If something came in your mind, you will try to achieve it at any cost. So she is of that mindset. So they have did the profiling calculations, each and everything they have did that. And they are speculating that Japanese Prime Minister is going to do something and offer something to the people of Japan, either yes or no. Because you have spent a lot of life in yes and no. Fine, now you have to choose either yes or no. So you are gambling, and the moment she said that, I am going to resign, immediately before this, see, sometimes what happened? You contacts in the government, because government people, they are also having a salary, and salary with the investments. So suppose that if you have some close person in the Ministry of Finance, and you come to know that government is coming for this corporate bond market, and in that Singaporean firm and all these firms are going to get an opportunity. आप 1000 crore बना सकते हो single instance में. One good information will give you 1000 crores. So आपको लगता है कि इनके ऊपर intelligence नहीं होता है. Finance Ministry have their own financial intelligence unit. So they do the surveillance. कि no information should be leaked. So certain people who have a very good information about the market and other things, they can exploit in any ways. Idea is, market is always having an opportunity to make money by risk. If it is a market, there is a risk. So I will buy your risk on your behalf and I will charge something. Fine. So in this case, what SBI is doing? SBI is saying that, okay, you want your comfort, I'll buy a comfort for you. But for that comfort, you have to pay the fees. So now, what will happen? With this, many of the investors will start investing at where? Yeah. Indian corporate bond market. And Indian corporate bond market become gradually popular. Once the Indian corporate bond market is becoming popular, more liquidity will be there, interest rate will automatically decrease. And we will have a proper, developed, mature corporate bond market like other economies. And economy which is largely driven by public sector right now, government sector right now, here the participation of private sector will also increase. अब public पूछ रही है कि government ने किया क्या इस budget में? What government have did in this budget? So this budget was not for short-term gains. This budget is planned for all the long-term gains. कोई भी short-term का proposal नहीं है इस budget में. All these proposals are for long term. Means the outcome of all is this year's budget you are going to see only after 4 years. So that means they are having this thing in the mind कि we will remain in the power for next 10 years. This is the confidence, na? All the proposals, all the plans they have mentioned in the budget, usually that do not happens. Government is looking for in the budget only for next 2 to 3 years. But the way the confidence they have shown, though kind of the instrument they are introducing, the policy they are mentioning, that is a long-term strategy, not a short-term strategy. समझ में आ गया? So, total return swap. Fine. Total return swap. What was the return value on that bond? 8% था. What was the bond value? 1000 crores. 8%. How much? 80 crores. So entire 80 crore which is being received by SBI. Why SBI will receive? Because SBI is a bondholder. So bondholder will receive the interest, but the entire interest will be transferred to whom? Singapore investor. So this is why it is called as total return swap. And against that 80 crore, SBI is going to receive how much? 5 crore as a rental fees. Understood? Now write what is safe harboring. What is safe harboring? Safe harbor. HARBOUR. Safe harbor. In economics and regulatory terms, in economics and regulatory terms, a safe harbor is a provision. A safe harbor is a provision to protect an entity from legal or tax liability. From legal or tax liability. If certain preconditions are met. If certain preconditions are met. It act as a buffer zone. It act as a buffer zone that offers certainty to business, that offers certainty to businesses, as long as you stay within specific boundaries. Comma, you are guaranteed to avoid penalties or audits. You are guaranteed to avoid penalties or audits. Audit. Fine? Audits. Right in the next line. In the globalized economy, safe harbors are vital. VITL, vital, because they reduce transaction cost and mitigate the regulatory risk that often paralyze long-term investment. And it is especially very important in context of country like India. For example, number one, case of transfer pricing. What is transfer pricing? Right. In India, CBDT stands for Central Board for Direct Taxes. In India, CBDT provides safe harboring rules. For example, to IT sector. for IT sector. Case in point, tax department might argue that a Indian subsidiary of IT company ABC, tax department might argue that an Indian subsidiary of IT company ABC is undercharging IT company ABC is undercharging their US sister company. एक बहन दूसरी बहन से कम पैसे ले रही है. Undercharging their sister US company. So suppose you are selling a product, fine, and you are selling a product in the market. You are selling the product in the market at $100. Fine. You are selling that product at the price of $100. But when you are selling the same product to your company, your sister company, which is in the other country, now you have to see that whether in that country it's a high taxed country or low taxed country. So suppose if it is a low taxed country, so market price is $100, but you will show that price is $30. Fine. And in this way, $30, you are making the product. For other country, you are showing other companies, and other country, you are showing the price as $100. But for this company, you are showing the price is $30. So if that company in their country, they are going to show their cost of how much? $30, and they will make a huge profit. Why? Their costing is less. समझ में आ रहा है कि नहीं? Are you getting this point? See, a Indian company ABC, fine, it is a IT company, fine. So they are selling a product X to a US firm, and that US firm is nothing but the subsidiary of ABC India. So they have opened their separate office at where? US, and they are selling their product to US based company. In India, suppose tax rate is at 30%. In US, tax rate is at 10%. Fine. In UK, suppose that tax rate, here also they have one subsidiary, and here the tax rate is 40%. Fine. So when this ABC India is selling any software to whom? US subsidiary. So they are showing the price $20. And when they are selling same product to whom? UK based company, they are showing the price to $140. And when they are selling this product in the open market, they have set the standard price how much? $100. Now why they are doing this? Because if they are charging higher price here, then this UK company's total expenditure is going to fall or rise? Rise. So automatically on books, they are going to higher profit or lower profit? Lower profit. So they have to pay lower tax at where? UK. Now this company is selling their product to whom? US. Now they have put the price how much? $20. So now because they have put the price how much? $20. So because of this $20, their profitability in their books profit is going to fall or rise? Rise. Why? Because they have to pay less cost. Fine. They have to pay less cost. So automatically ABC is trying to do what? They are transferring all their profits where? There. And it is a very common practice by the companies. And one of the charge on Adani Group. This is one of the charge put on whom? Adani Group. What they are doing? They are purchasing. See, you can purchase. You are involved in energy business. Fine. So you have to purchase a solar panel. Now you are deliberately purchasing a solar panel from a Mauritius-based company. Though you can purchase from any other company in India or from China, you are deliberately purchasing from which company? Mauritius-based company, and that Mauritius-based company have basically their headquarters at Dubai. And in Dubai, the majority shareholder of one member who's a majority shareholder in that company, he is from Gautam Adani's family. So what is happening? Gautam Adani's family, one member, fine, he have one company based in Dubai, operating from Mauritius, and they are selling the same product to Adani's company in India, Adani Energies, which can be purchased by Adani Group at 5 rupees. And Adani Group is paying 500 rupees to that company. So automatically book profit will be what? Reduced. And book profit is reduced. And that is why you have to pay less tax at where? India, whereas Mauritius is already a low tax country and Dubai is also low tax country. Transfer pricing. Fine. अभी समझ में आया? तो गेम ऐसे किया जाता है. ठीक है? So government have to go for audits or not? Government have to check कि कितना प्राइस चल रहा है भाई तुम्हारा. तुमने बता दिया, you have told the government कि this is my book profit, चेक कर लो, सारी कैलकुलेशंस ठीक हैं, all the calculations are correct, we have not make any calculation mistakes. अरे भाई कैलकुलेशन नहीं, तुमने तो पूरा मैथ ही बेड़ागर करके रखा हुआ है. You are doing all these things, so we need to do a audit. और अगर audit start हुआ, if the audits are going to start, then it will take time. All the accounts will be freezed. No business transactions are allowed. So you have to sit quietly for maybe 2 to 3 years. Quiet. No business. Nothing will be. Because forensic audit is required. No transactions. So company is going to be in big trouble. Fine. So if you have a plan of expansion on all doing this business, so for next 2 to 3 years, you can't do any business. A huge loss for the company. Fine. But at the same time, taxation department also have to involve in this litigation process. तो दोनों के लिए burden है कि नहीं है? Both are having a burden. So that is why taxation department said that. कि भाई, when you are going to publish your book profit, कुछ नहीं करना है. But just mention at what price you are selling in UK and at what price you are selling in US. High tax country and low tax country, at what price you are selling. So if you are selling in both country at $70, here $70, here $70, that means you are doing fair things. So if you will bring this one, I am not going to initiate any audit on you. This is called safe harbor. Safe harbor will be available only when you are going to fulfill certain conditions. So the taxation department is going to set certain conditions, and if you are fulfilling certain tax conditions, tax department will consider you are a good person. So any minor mistakes are being avoided. Sharma ji ka beta. Fine. He cannot do anything wrong because he is getting good grades in the exam. So hota hai na, if you are having good grades, fine. So in the exams, if you are having good grades, all other things are fine. Until unless you are going to be conduct or do a big crime. Otherwise, minor things are being avoided, yes or no? हुआ तुम्हारे साथ कभी? नहीं हुआ होगा. सेफ हार्बरिंग के लिए कुछ कंडीशंस फॉलो करना होता है ना. अब बटर के साथ मिल्क करोगे तो कहां से होगा? हैव यू गॉट द सेफ हार्बरिंग बेनिफिट इन योर लाइफ? लड़कियां तो पूरी लाइफ उसी पे जीती हैं, सेफ हार्बरिंग बेनिफिट पे. फाइन. रोना शुरू पहले से ही. फाइन. तो क्या है वो आंसू जो है वो क्या है? सेफ हार्बरिंग ही तो है. दैट इज एक्चुअली सेफ हार्बरिंग. सो understand the idea of the safe harboring. And do you know why I'm emphasizing too much? Just download the budget document and put a word safe harbor in a search, and you will find the mention of safe harbor word at least 10 times. Different places they are mentioning about safe harbor, safe harbor, safe harbor, safe harbor. Taxation mein safe harbor, investment mein safe harbor, and for financial sector safe harbor, fine. For MSME sector safe harbor, for every section they are mentioning safe harbor. Means government of India is called as a tax terror. ठीक है? इंडिया में कॉन्सेप्ट है टैक्स टेररिज्म का, where the investors, where the taxpayer are being terrorized. One person in Bangalore, he committed the suicide. Fine. So India as a tax destination is a notorious, and government of India desperately want to end this notorious practice. One more example I'll give you. You are an importer. So you are importing the goods from outside. Fine. And while doing this import, you have to go for mandatory checks at airport or the seaport. So now government of India is saying that if you will follow the safe harbor, fine, you need not to go for physical inspection. Aapko physical inspection bhi nahi karana hai. If you are following certain, but here condition is, your track record should be clean. In past 10 years, you do not have any questions on you ki you are doing the malpractices. So if you are having the clean records and you are going to follow certain safe harbors, all the imports which you are calling from other country will be bypassed without any physical inspection. Big thing, very big thing. Why? Because your image is so bad in the past. आप notorious बोले जाते हो. India is called as a notorious country with respect to customs, with respect to tax. Trade deal आपने कर भी लिया. Still European Union, US and other countries are having the fair idea about India, कि how India do this tax terrorism. Backdate से tax लगा दिया, बात में बात बदल दिया, फिर change कर दिया. All these things done by whom? मेरा भारत महान. Fine. So you have that bad image. That is why in this budget you try to clean your image by everywhere pasting safe harbor, safe harbor, safe harbor. Fine. Everywhere you are providing the safe harbor. Understood? अभी समझ में आया इस example से? Transfer pricing clear हुआ? Fine. So pricing, transfer pricing in this case, if you will give the statement, then you will be safe. Fine. So please write it there. क्या लिखा था लास्ट? मुझे कुछ नहीं समझ में आया, तुमने क्या लिखा है? हाँ? Okay, fine. Right. Undercharging its US sister company to park profits in US. Thereby evading taxes in India. Thereby evading taxes in India. Now, right? Now to determine arm's length price, to determine arm's ARM, S, arm length price. So एक concept होता है economics में, arm length pricing. Fine. So what is arm length pricing? So arm length pricing means what price you are offering to your sister company and what pricing you are offering to a independent market company. So the price which you are offering to the independent company, which is not related to you, that will be called as arm length price. Arm length price. Whereas if the arm length price is higher and for certain company price is lower, certain company price is higher, certain company price is lower, then it is called as transfer pricing. So आप प्राइस को क्या कर रहे हो? ट्रांसपेरेंट नहीं रख रहे हो, ट्रांसफर कर दे रहे हो प्राइस को. You are transferring the price from one area to another area. You are charging outside vendor higher and your own vendor lesser, so that your own vendor is going to make a high book profit, and all the profits from here you can transfer in that country. Fine. So how taxation department will know that you are doing this? So taxation department will launch an audit, and in that audit they will check that what price arm length price. So with this arm length price, they will come to know that कि whether you are involved in transfer pricing or not. और ये बहुत बड़ा issue है. It's a big issue in India. Fine, because India is also one of the high taxed country in the world. Fine, India is not a low. India is a high tax country. So in the case of India, it is very common practice by businesses. They go for transfer pricing. They will try to shift out all of their profits from India to other country. So sometimes we say that we came to know that in the news. Indian company becomes so big, they have opened their company in the 3-4 different country. और वो आके अपना portfolio बता रहा है कि I have started from zero, now I am operating in 4 countries and I am proud to be an Indian. I want to my India will grow and I want my India should make a big name in the around the world. सारी बातें बता रहा, but actual reason क्या है? That 3 company who have operating outside the India, that is not for the purpose of business. He want to transfer his profit from India to that destination. So this is also happens. Fine. Nationalism is a trait of poor people, not rich people. They never be nationalistic as poor people are. Fine. So this is what usually said that. अभी arm length pricing clear है? आगे लिख लो उसको, फिनिश कर दो यहां पर. Arm length price, which is often subjective and lengthy process. Subjective and lengthy process. Hence, CBDT and IT company ABC, CBDT and IT company ABC agreed for safe harboring. Under this, Indian company have committed to show profit margin of 17 to 18% minimum on its operating expenses and CBDT will accept that price. CBDT will accept this price without further audit. So you showed that, you told the taxation department, I am going to show at least 18% profit on my books. So if you are going to show 18% profit on your books, that means we are assuming that you are not involved in transfer pricing. If you will try to show only 8%, 7%, then the suspicion will grow. Fine, suspicion will grow and then we will force to launch a audit in order to find arm length price. But if you are showing me 18%, that means maybe to some extent you are involved in transfer pricing, but not in the larger extent. You are not causing a huge loss for the taxation, and that is why, despite knowing that you might be involved in small tax evasions, but they are not as big. अब देखो वहां पर आप चुप कर रहे हो, you are evading the tax. Fine. Now suppose they are evading the tax of 2 crores and CBDT is going to launch the audit. The auditing cost is going to be 20 crores. Company's business is also going to be get impacted. So this is why let's ignore certain rules. So in the very simple raw language, कोई बात नहीं, ब्लास्ट तो नहीं होगा? Then it's fine. Fine. Because before that I have to make few calls. That's why I was asking. So the idea is, I know that there are certain rules which might be companies are violating. But I also know that in order to enforce those minor rules, there will be huge cost for us and huge cost for them to fight the litigation. So it is better, aap bhi khush raho, hum bhi khush rahe. You scratch my back, I'll scratch your back, both will be happy. Transfer pricing, hum investigate nahi karenge. We are not going to investigate transfer pricing if you are going to follow the bare minimum safe harbor rule. ठीक है? Safe harbor rule clear? Now, the biggest thing for the MSME sector, fine, that is MSME sector के लिए गवर्नमेंट ने एक और स्कीम लॉन्च किया है, that is called as, अरे अभी इस बजट में, in this budget, what government have launched for MSME sector? देखा भी नहीं किसी ने बजट? First page, huh?
Yesterday said nothing budget is allocated for education.
I have said nothing is allocated. Have I said this? Have I said this? Because she also came, she said same thing to me. Ki sir, you said ki nothing is being allocated for the MSME sector. Actually, I want to say that ki everything is allocated for MSME sector. In this budget, huge allocations, funds, schemes, fine, various schemes in this budget for which sector? MSME sector. So write the heading. Budget offerings for MSME sector. Budget offerings for MSME sector. MSME stand for? Micro, small and medium, or medium, small and micro? Micro, small and medium enterprises. Fine? Right. In budget 26-27, government have launched various schemes. Government have launched various schemes for MSME sector. Especially MSME growth fund. Especially MSME growth fund and self-reliant India fund. On the basis of fund of funds model, on the basis of fund of funds model. Now write first SRI fund, self-reliant India fund. Self-reliant India fund. It operates through a concept of fund of funds, where there is a provision of, there is a system of, not provision of, there is a system of mother fund and daughter funds. Mother fund and daughter funds. मदर एक ही है, डॉटर बहुत सारे हैं, ठीक है? मदर फंड एंड डॉटर्स फंड. It was designed to provide equity infusion. It was designed to provide equity infusion to MSME that have a viable business model, but are struggling, with high debt to equity ratio, struggling with high debt to equity ratio. Underline this term, debt to equity ratio. Right in the next line. Here, government acts as a anchor investor. Here means where? SRI fund, Self-Reliant India Fund. So in the Self-Reliant India Fund, there is a mother fund and daughter funds. Fine. So here Government of India, right? Government of India acts as a anchor investor. Government of India act as a anchor investor, in brackets, mother fund, bracket close, which is managed by National Small Industries Corporation, National Small Industries Corporation, a venture capital fund in India. Underline this term also, venture capital. Right in the next line. The mother fund do not invest in MSME directly. And they invest in private equity funds or venture capital funds. Who act as a daughter funds. Fine. Right in the next line. These daughter funds are required to raise 80% capital on their own and 20% will be provided by National Small Industries Corporation. NSIC. Fine. National Small Industries Corporation. Fine. Right. In the next line. The present budget proposal, present budget means 26-27, proposed a second trench for SRI fund, which was launched in 2021. With specific target of targeting strategically important MSME sectors. Targeting strategically important MSME sector. For example, defense component making MSMEs, aerospace, defense, aerospace, and semiconductor. The goal is to ensure that Indian MSMEs move up the value chain, from simple fabrication to complex subsystem, manufacturing. So see, this Self-Reliant India Fund is already in existence. It is nothing new fund. This Self-Reliant India Fund is already in the existence from which year? From 2021. Fine. But now government said that we are going to provide additional allocation to Self-Reliant India Fund. And this fund works as a fund of funds. And the concept is mother fund, daughter ray. कौन बोला रे सन? है? Daughter fund. Fine. And this is also very important. When you are writing in the exam, rather than giving example of he, prefer the example of giving she. Fine. So जेंडर न्यूट्रल पे नहीं जाना है. एलजीबीटी को सपोर्ट करने की भी जरूरत नहीं इंडिया में. ज्यादा जरूरत किसको सपोर्ट करने की है? फीमेल को. ठीक है. टाइगर वी कैन सेव लेटर, गर्ल चाइल्ड नीड टू बी सेव फर्स्ट. फाइन. बिकॉज यू हैव टू मैरी विद not tiger but with a girl. Fine. So this is why it is more important. However, government of India have taken a big initiative in this budget to save tiger also. India is going to conduct Big Cat Alliance. Big Cat Alliance or Big Cat Summit. So India is going to conduct Big Cat Summit, and they are going to invite somewhere around 100 to 120 countries to join this summit. Fine. How many types of big cats are there? Seven. In India? Five. Jaguar? Puma? Not here. So how many are there in India? Five. Which one? One is tiger. Second is lion. Third is cheetah. Fourth? Snow leopard. So that will come under the category of leopard or separate category? Separate category. So is there, I have asked this question in past also, is there any national park in India which have all three big cats? Which one? Any national park in India with all three? Lion, cat, that is tiger, lion, as well as cheetah.
It is in the proposal.
हाँ, तो वही तो मैं पूछ रहा हूँ, प्रपोजल किस नेशनल पार्क के लिए है? Which national park have this proposal to have all three big cats? Because no national park in India at present have all three big cats. Fine. So देखो, UPSC also asked trivia. Remember that. UPSC also asked trivia based question. Fine. But their trivia is always having a strategic significance and relevance. They are not going to ask कि बताओ अशोक नगर की कौन सी रोड पे सबसे ज्यादा इडली मिलती है. They are not going to ask such questions. They are going to ask strategically important question. Fine. So I told you at that time also, again I am telling you, go with this data. Fine. So आप देख लेना उसको एक बार, वरना क्वेश्चन आएगा तो फिर याद करोगे, ठीक है, कि भगवान बचा लो, ठीक है, तो भगवान के भरोसे मत रहो, भगवान आपके भरोसे हैं, ठीक है. So help yourself on your own. So in this fund there are the two type of the fund, mother fund and daughter fund. अब वहां पर एक बात हुआ है वेंचर कैपिटल फंड का. Fine. Venture capital fund. So venture capital fund, so certain people are ready to invest their money. Fine. Certain people are invest their money in order to take a risk, in order to make that business viable. Fine. So they will take a risk, and because they are taking a risk, government will support them. Fine. By providing 20%. So suppose you have a good faith in your friend's business. He newly started his momos business, fine, and you feel that his momos business is going to grow very well, fine, and you have decided to invest in that, fine. So do you think government of India is going to help you in that scale up of his business? Answer is no, because neither he is proven, nor his have any vision regarding scalability, and the most important factor, it is momos. It is not a strategic sector. So first government see that ki what business is. So government saw that ki it is a business of strategic sector where they are manufacturing certain goods which are important for defense manufacturing. Fine. And there is a chance of scalability in that. Scalability in that, for example, if you are making some part of BrahMos missile, fine, Indian vendor. But the problem with the BrahMos missile is very costly missile. So the annual production rate is going to be not more than 25 to 30 missiles. 8 मिसाइल आपने ड्रॉप किया था, उसमें तो उनका काम तमाम हो गया. Fine. So you do not to send such a highly costly missiles. But if you are making a artillery shells, fine. So there are many artillery shells, they are being used for the practice purpose. BrahMos you are not going to use on the practice purpose on regular basis, but artillery shells, machine guns, all these equipments you are going to use on very large scale. So there is always a chance of scalability of that thing. Fine, scalability of that thing. So one Indian company, SSS Defense. Fine. So this SSS Defense, they started manufacturing some part of the rifles. Fine. And government of India helped them. Some private companies also involved. Now this SSS Defense, this company is providing wide range of rifles in India. Fine. And in fact, Indian Army is giving order to SSS Defense, and they are able to compete with a company, Dubai-based company like 𝐾𝐞𝐚𝐫𝐧𝐢𝐧𝐠. So that rifle is one of the finest rifle offered by Dubai-based group. Fine. And US-based group. Now this SSS Defense is able to compete with them. Why? Because of this fund. So what happened? SSS Defense, they started selling some part of the rifles which is used by Indian Army. Fine. And then they need a fund. So certain investors shown the interest, but the amount demanded by them was huge. So government of India said that you invest, if you will invest, 20% will be given by us. So here what will happen? Here two funds are there, mother fund and daughter fund. So if you are going to invest 80%, then mother fund will give you how much? 20%. But this daughter fund must be invest in equities. Debt में investment नहीं करना है, equity में invest करना है. You have to take their shares. So then we will provide you the assistance. So a sort of assistance is going to be provided by whom? Government of India, to help those MSMEs which are strategic in the nature and having the scalability. So only strategic is not enough, because there are certain strategic sectors, scalability is not there, because you are manufacturing such product which is going to be manufactured only in very few quantity in a year. Okay, but if you are manufacturing something like semiconductor or some part of the semiconductor chain, so you are going to have a bulk in the order. So there is a scalability. Usually, why scalability? I am again and again repeating. Because investor will invest in your business in equity, only when your business have a scalability. So if I am giving my 50 crore rupees, see, if I have purchased a share in your company, and if I have given a debt to your company, so if your company even is going to bankrupt, they have to sell that assets and repay my debt. And if company is going to fall, then they do not have a liability to repay of the equity. So this is why when the venture is new, fine, the venture is new, business is new, usually investors are having hesitation to invest in the equity of that company because it is not a proven business. And if it is not a proper proven business, then there is a chance of having huge losses. But if I will give a loan, then anyhow I will get some money. So this is why government said that if you invest, that investment should be in the equity capital. So that is why we have mentioned private equity capital. So if you will invest here, then you will get a fund from whom? Then you will get a fund from government under the mother fund. Right, one more. SME growth fund. SME growth fund. Right? While SRI fund focuses on equity infusion. While SRI fund focuses on equity infusion, the SME growth fund is designed specifically for IPO. IPO stand for initial public offering, especially for IPO ready SMEs. IPO ready SMEs. Please keep this thing in the mind very clearly. SRI fund is for whom? MSME sector. This is for SME sector. This is for SME sector. That is for MSME sector. Difference number one. Difference number two. SRI fund is for equity infusion. Fine. Equity infusion. Strategic sector. Fine. But this SME fund is for whom? It is for IPO ready firm. Once you are IPO ready means what? You are already proven. You are already proven. Now on the basis of your proven track record, market regulator SEBI is ready to allow you to enter in the capital market. So who is more mature firm? So which is more mature firm going to get this fund? SME fund is going to provide it to whom? It is going to provide more mature firm who are ready for IPO level. Those who are not ready for the IPO level, for them this is SRI fund. So SRI fund for those new companies who do not have a proven track record, but they are having huge potential to grow and strategically important. So you want to incubate them. You want to nurture them. And once they are being nurtured, they are ready for big place like market. Then you will provide what? SME fund. Right? Right there, please. IPO ready SMEs. IPO ready SMEs. The fund act as a. Which fund? SME growth fund. SME growth fund act as a pre-IPO anchor. Pre-IPO anchor. It invests in SME. It invests in SME that are planning to list. That are planning to list in National Stock Exchange or Bombay Stock Exchange within 18 to 24 months. Within 18 to 24 months. by taking an equity stake early, by taking an equity stake early, the fund provides a stamp of approval, which encourages retail and institutional investors, to participate in huge number at IPO event of that SME company. A significant portion, right in the next line, a significant portion of this SME fund, SME growth fund, a significant portion of this SME growth fund will go to Industry 4.0. Industry 4.0. What is Industry 4.0? Industry 4.0. Which sector? Which sector will come under the Industry 4.0? How many phases of the Industrial Revolution are there? How many phases of Industrial Revolutions are there?
Fifth one is going, right?
Fifth one is going or fourth one is going on?
Fifth one is going. Fifth one is going.
Fifth one is going. What is in the fifth one?
Only private companies.
Only private companies. Kuch bhi. Right in the bracket. Industry 4.0 technologies. Industry 4.0 technologies like artificial intelligence, Internet of Things, and automation. To ensure they are globally competitive. Post-listing. Globally competitive post-listing. Fifth कब start हुआ? Industrial Revolution? Huh? When the fifth was started? Huh? हमें पता ही नहीं चला fifth वाला start हो गया.
Actually started like people most of people are actually talking about that.
People are talking about coming of the fifth industrial revolution.
They are saying it started, but we are not able to see the part.
Acha, it is already started, but we are not able to see.
Yeah.
If we are not able to see, then how you will prove that it is going there?
After 1 year, 2 years, we always like it already started there.
That is always a possibility. But what are the things under the?
Things are not meant to be like date, right?
I agree with you, but my question to you is, on what basis they are saying that the fifth is already ongoing in 1 to 2 years we are able to see? See, if they are saying, if you are saying, if I am saying, if anyone is saying, there should be certain backing for it. So my question is not whether fourth one or the fifth one. My question to you, if you are saying fourth one, then what is the basis of calling as a fourth one, even if it is not visible to us, but in what basis, on what basis those people who are making such a comment, what is their basis? This is my question to you. You can take your time today, tomorrow, or few more days, but that should be clear to you. Fine? Not me, because I have not to appear in the exam. Fine? But I am also curious in order to find it out, because you said that I agree with your points. I am not disagreeing with your point, but I want proper evidences. Fine? Okay. So in this context, the SMEs, MSMEs, fine, SMEs, fine. So this MSME sector is very important. One more thing which need to be addressed. Shall we go for today or tomorrow? Today. Tomorrow. So SMEs, MSMEs, Mitra. Fine. Mitra means enemy. Friend. Ha. Mitra means friend. So government want to have a friendship with whom? MSME sector, so that they can be helped as a friend by the government. Fine. So अरे अभी क्लास खत्म नहीं हुआ है, अभी मैं लिखाना शुरू कर दूंगा, पैराशूट बाद में बांधना, पहली बात ध्यान से सुनो, ठीक है? सुन लो पहले ध्यान से. So this sector, MSME sector, is an important sector and it is a most crucial sector. Fine. So I will explain that part also. One or two more thing is there in the budget. So tomorrow I'll finish the budget part. Then I'll start the economic survey. And in the economic survey, as I said that earlier also, I'm not going to deal with any data. Only important points, concepts they have mentioned in the economic survey, only that part I'm going to deal, especially from exam point of view, nothing else. As economic survey is not for UPSC aspirant, it is for policy making. So only that portion which is important for policy making point of view, only that part we will take. Budget is because policy making thing. Fine. Policy making thing, especially for the public administration with respect to the government of India. That is why we have went for extended details. Okay? So kal means tomorrow I'll provide you some certain PDF which I have promised, including sovereign gold bond. Yaad hai mujhe. Fine. You need not to remind, I remember. So sovereign gold bond and other small schemes which is announced in the budget, I'll provide, and then I'll start economic survey. Fine. And acha, one more thing. I told you about the PRS. If I have not told the other batches, there is a website PRS. Fine. So PRS website is very good, and they have also compiled the 16th Finance Commission report in 4 pages. 4 पेज का रिपोर्ट है और वो more than enough है आपके एग्जाम के लिए. So if you are looking for certain data with respect to 16th Finance Commission, go to their website and download that 4-page report. That is more than enough. But still you have khujli, then you can go and download entire report of 376 page on report of Finance Commission in their website. But absolutely it is not required. Only that PRS report is enough. Okay? Thank you.